Hey, I'm Paul here, and in this video we're going to discuss how the estates of business owners can defer estate tax for 15 years after the business owner passes away. So one of the biggest arguments against the estate tax is that it makes it difficult to pass along the ownership of a successful privately held business down to the next generation. But it may not be quite as difficult as you think. So let me give you a scenario that I worked with. I was recently working with a business owner couple, and their business made up the bulk of their estate. And their estate, again, the bulk of which was their business, it was valued at about $30 million. And I realized, almost no one has a business worth that much or an estate worth that much, but these people did, and so there's serious problems. In fact, even though you may never have a $30 million business, might want to just listen in so you can maybe sound like you know what you're talking about next time you and your buddies get together and talk about, taxes and the government and all that. All right, so an estate consists largely of their business, $30 million. They had been talking to an insurance agent, and the insurance agent had scared them to death. The insurance agent said, there's a 50%, the government's going to take half of your estate when you die. That was what the insurance agent kept saying. And so the insurance, you got a $30 million estate. When you die, immediately $15 million, got to send it to the IRS. So the wife was really kind of freaking out. She's like, oh my God, if we die, me and my husband, $15 million of cash would be due immediately to the IRS, and just about all of the value of our estate is tied up in our business. That will completely destroy this business that has taken 2 generations to build. This is awful. And so, of course, the insurance agent's solution was to have them purchase a $15 million life insurance policy at exorbitant rates. Of course, it wasn't term insurance. It was, permanent life insurance, and it was just was costing crazy kinds of sums of money. They couldn't even gift their money to their many kids fast enough for them to be able to purchase the life insurance to cover that problem. Anyway, that was the proposed solution. And I said, that's an option, but at least make an informed decision. So I said, let's look at it a little closer. And I realize estate tax laws will change, and I realize the value of your estate will fluctuate, but let's just look at it in today's terms. So we do have an estate tax exemption for 2020, $11.58 million, and each one of you gets that estate tax exemption. So each of your estates gets that. So now it's 11.58 times 2, 23.16 million of your $30 million estate would be exempt from the 40% estate tax. So that makes roughly $6.84 million of your estate subject to the 40% estate tax. So if you both died today and you had a $30 million estate, there'd be $2.736 million of estate tax due. And then, like the husband said, he's like, we've almost got that much in our savings and in our kind of liquid and invested, publicly traded, invested, assets and resources. So I think, we could cover that 2.7 million, just, how it is, and then the kids would get our business. And then I said, have you ever heard of the, Section 6166 election? Of course, they said no. So here's the deal on that, and this is a scenario where if it fits, boy, the estates get to really defer estate tax for a long time and make it easy for the business to absorb the estate tax hit. So here's the way that works. I said, guys, if the ownership interest in the business that you own comprises more than 35% of your estate or your adjusted gross estate, your estate, and if within 9 months after you both die, the representative or the executor of estate, timely makes this appropriate 6166 election on your estate tax return, it's timely filed within 9 months after both of you die, then that $2.736 million of estate tax that would have been due, they don't have to pay any of it right then. For 5 years after you die, only interest on the deferred tax must be paid at a special 2% interest rate. So that takes place for the first 5 years after you die. And then beginning 5 years after your estate tax return is due, 5 years after 9 months after you die, then the deferred tax is payable in 10 equal annual installments. And so, we look at their numbers, there would have been $2.736 million had they paid it immediately when they died. But now they're looking at an opportunity to pay no tax or just the interest at 2% over a 5-year period. And then beginning 5 years after they both pass away, roughly let's call it $280,000 of tax each year for a 10-year period. So like the husband said, he says, you know what, if we just do nothing and that's how it plays out, then when we both pass away, our son, who will be in charge of our estate, he can decide whether to just use the resources that we have, the liquid resources that we have, to pay that estate tax, $2.7 million, right out of the chute. Or our son could elect to take advantage of this 6166 election, pay no tax for 5 years, pay a little bit of interest, and then pay the tax after that, after the 5 years, in 10 equal annual installments. So he was like, boy, now I'm starting to see why I don't necessarily have to buy a $15 million life insurance policy in order to save my business and pass it along to our children who work in the business. So a lot of relief there. The issue is, part of putting together an overall estate planning program, especially when there's the potential for estate tax, is getting all of the options out on the table before you start making decisions that you can't change. For example, if they were to go out and lock themselves into this life insurance policy and this humongous gifting program, it would kind of be something that would be very difficult to get out of, very costly to get out of. And so that's my point. Just get informed, know all your options before you start, like I said, making some decisions that you can't change. The other thing that's real important is that you smash the like button so the YouTube algorithms will keep showing my videos to you so you can be smarter than everybody else. Hit the subscribe button and the notification bell, again, so the YouTube algorithms will keep you posted and keep people, keep my face in front of you, for lack of a better term. Okay, so the 6166 election, a lot of business owners don't know about it. It is a viable option when it fits in the right circumstances. Be aware of it, get informed. We'll see you next time.